Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how I would trade Opendoor Technologies. Now, Opendoor has had a very steep incline over the last couple of weeks, and it has been promoted on lots of the social media forums out there. So, if you are going to use this stock in order to make some money, then it might as well you take a look at this video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you that if I were to trade Opendoor Technologies, I'm going to go ahead and show you two option strategies that I'll definitely use in order to make some consistent income. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. So, conveniently, the stock ticker for Opendoor is going to spell open to the top OPEN. Now, before we go ahead and dive into the two option strategies that I would be using, let's go ahead and jump into Robinhood advanced feature in order for us to open up the chart to see the stock movement. We're going to go over to the 1 year chart. And as you can see here, this stock has a very steep upcline from right here around July 31st until now. The stock has gone all the way up to $10. Now the $10 price is IPO price back in, I believe, June of 2020. So it's finally back at its IPO price. Now I did trade this stock back in the day in 2021, and I traded the stock off of only hype and momentum. This stock doesn't have any good fundamentals. So personally, I am not trading this stock, but if I had to trade it, I'm going to show you what I was going to go ahead and do. Now, this is a setup that I do not favor. I do not favor any setups where the stock is overbought. As you can see here, the share price of $8.82 is currently above the 200-day moving average. Now, the RSI, which down here is it has a 62 RSI, which is pretty close to the highest RSI of 70, which tells you that that stock is clearly in overbought territory. Once again, this stock back in 21 was living off of hype. Now, come 2025, this stock is living off of hype again and no fundamentals. Now, let's go ahead and we're going to go back to Opendoor in order for us to get a bit more information before jumping into these option strategies. So I'm going to go ahead and I'm going to scroll down. And the first thing we're going to look for is the 52-week low. The 52-week low is 50 cents. The 52-week, however, is $10.87. In this scenario, the current share price of $8.82 is way closer to the 52-week high than it is to the 52-week low. So that suggests that there's a strong possibility that this share price comes back down. Now, it can continue to go back up, but the odds is more in the favor of this share price going down. Now, let's go ahead and go down so we could check out the trading trends and also the analyst ratings. Now, under the trading trends, you could see Robinhood, people are not buying this. It's only a very small buy. Once we go to the hedge fund sides of things, you could see hedge funds want nothing to do with this stock. Now, interesting enough, when we go to the insiders look, we could see the insiders obviously know something that we do not know. So this needs to be, or I need to give this some more investigation. Now, let's go ahead and go down to the analyst reports and see what analysts are saying about this stock. Okay, so here we are under the analyst ratings, and the analysts are saying this is a hold or a sell. There's equal sentiments on hold and sell, and it's very low on the buy aspect. So they're actually saying this is not a buy for right now. Now, based off all that information I just gave you, if I were to trade this stock, this is what I will be doing. Let's go ahead to trade open options down here to open up the options chain. Now that we are on the options chain, before I go ahead and get into these two option strategies, I need you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. The second favor you need to do yourself, always make sure to have an exit strategy. That way, in case the trade do go tits up, then at least you know how to get out of the trade. And remember, these videos are for entertainment and educational purposes only. So let's go ahead. Okay, the first option strategy I'll be doing with this, and this works especially if you're trading with a small account. Based on the share price of Open right now, you can trade this with a small account. So the first strategy, I'm going to go to sell. I'm going to be going to put and I'm going to be choosing the strike date. The strike date I'll be going with is going to be October 24th, and that's going to give me 29 days to expiration. Now, the reason I'm giving myself this amount of time is because I have an exit strategy in mind. The exit strategy I'm going to be using, I'm going to be making sure to close this trade out before expiration date. Now, also, this is not one of those stocks where you could just go ahead and do the option strategy and forget about it come expiration date. You really need to monitor this stock. Now that we have sell and we have put and we have chosen our monthly expiration date, now I'm going to go ahead and select my strike price. The strike price I'll be going with is going to be the $6 strike price. The reason I'm going to be going with the $6 strike price is because after doing my own research, I have come to the conclusion that the $6 price is at least a fair price. So at the $6 price, because this is a sell option strategy, you're going to be paid. The amount you're going to be paid is going to be 0.26 or $26. Each option contract does contain 100 shares. So you simply multiply your 0.26 right here. You multiply that by 100 shares, and that's going to give you $26. So the first option strategy that I would use with Opendoor right now is going to be the cash secured put. With the cash secured put option strategy, you will need to leave some money as collateral. The amount of money you're going to leave as collateral is always going to be whatever the strike price you chose multiplied by 100 shares. Remember, once again, each option contract does contain 100 shares. So your collateral in this case is going to be $600, which makes this perfect if you're trading with a small account portfolio. Now, here's the thing, right? The reason why I would do a cash secured put at the $6 price is the amount of premium I'm going to be receiving. The amount of premium I'm going to be receiving is going to be $26. However, what I really like to focus on is my ROI, or my return on investment. So to get the ROI on this, all you need to do, you're going to divide the amount of money you're going to receive, which is going to be $26, divide that by the amount of money you need to leave as collateral, which is going to be $600, and that should give you a 4% return. Now, a 4% return is a very, very good return over a monthly basis. Trading a stock as extremely volatile as this and still making a decent return. Now, the one reason I would trade open, which I'm definitely not going to trade it, but if I did have to trade it, the one major reason I would trade it for is because of the options premium. Opendoor is paying one of the highest option premiums right now. And the only time in the stock market you get some high options premium is if you have some high volatility. The two of them definitely goes hand in hand. So with this strategy now, my exit strategy is going to be whenever my trade is up around 75%, I'm going to go ahead, I'm going to close the option, I'm going to lock in my investment gains, and that's it. I will, however, go ahead and do another option, another cash secured put at a lower price if the share price does go down, come close to the expiration date, or come close to the date that I decide to go ahead and close this trade. Now, the other option strategy I'll be doing on this would be a covered call. Now, in order for you to do the covered call, you must own 100 shares of the stock. So what I would do, I would go ahead and buy 100 shares of the stock at the price it's trading at right now, which is $8.82. Once again, this is going to be perfect if you're trading with a small account. Now, I know what I said at the beginning of the video. This stock is very volatile, but why do I want to own 100 shares of it? Of course, I have a plan, which I'm going to show you right now. Before I do that, if you guys haven't already, now would be a perfect opportunity for you to go ahead, like the video, subscribe to the channel, and make sure to hit the notification bell to get my Wednesdays alert whenever I do the live trades right in front of you guys. Now that you have bought 100 shares of Opendoor at a price tag of 8.81, or let's round it up to $9 per share. So now you have spent $900. With the first option strategy, the amount you're going to be using is just $600. Remember, with this next option strategy, you may have to use a bit more money, but I will show you how to reduce this money right now. So now that we have 100 shares of Opendoor in our portfolio, now we're going to go ahead and we're going to sell covered calls against it. Now, this is what you do for the covered call. We're going to go to sell. We're going to go to call. We're going to maintain the exact same strike date of 30 days to expiration. Now, what I'm going to do, I'm going to go ahead, I'm going to choose my strike price. The strike price I will be choosing is going to be above the current share price. I'll be going with the price of $11 right here. The reason I'm going with the $11 strike price is twofold. Number one, I have a very high chance of profit of 80% right here. And also my options premium. My options premium is going to be $1.10, or in the real world, that's going to be $110. Now, I did tell you how I'm going to help you go ahead and reduce this share price right now. Let's go ahead. We're going to click this. And this right here, investors and future investors, is the covered call. Once again, sell, call, you choose your expiration date, you go ahead, you choose your strike price above the share price, always remember that, and then you collect your premium. This premium right here of $110, that's going to be yours to keep no matter how the trade goes. But this is the most important part about this premium. This $100 that you receive, what it's going to do is that it's going to help you lower your average cost. Your average cost right now, as we mentioned, is going to be $9 per share. When you receive this premium of $110, your average cost right now is now going to be around $8 per share. So right away, that's why I'll do the covered call option strategy, because I'm now able to lower my average cost right off the bat. Now, this is what I'm looking to do as an exit strategy. I'm looking to do a covered call similar to this, $400 at least for 3 months. And most of you guys probably know what I'm getting at right now. If I were to do this for 3 months, what I would do is that I would now be able to lower my average cost to $6. And remember, I just stated that's the price I think is fair for Opendoor. So all you need to do is do this cover call 3 times to lower your average cost to $6. And then after that, I think everything after that is going to be just profit for you. Now, here's the other thing about the covered call option strategy. Not only are you going to stand to get this amount of money, it's not going to be exact, it's going to fluctuate during the months. But the most important thing, the money is yours to keep. Now, if Opendoor do decide to continue going up, remember, we don't know if it's going to continue to go up. We do not know if it's going to go down. But if it does continue to go up and it goes past this price right here of $11, well, now you're going to have another win. Here is the win you're going to have. You did purchase Opendoor at $9 per share, but now it's gonna be sold at $11 per share. The difference between your $11 and your $9 is gonna be $2. So you're gonna lose your shares, but you're gonna get $2. Remember, I did mention this twice before. Each option contract does contain 100 shares, so you're gonna multiply your $2 by 100, and that's gonna give you $200. So your gain on Opendoor is going to be, you're going to get back your $900 that you paid for the stock, plus you're going to get an additional $200, which is going to be capital gains, or how I like to call on this channel, investment gains. And also, in addition to that, you get to keep your $110. Now, like I said, I would not be trading this stock, and this stock is extremely volatile. Not because those two criteria suffices, does not mean there isn't opportunity for you to make money with this stock, especially if you're trading with a small account. So there you have it, investors and future investors. If I did have to trade Opendoor right now, I would definitely utilize 2 option strategies: the cash secured put and also the covered call option strategies. And most importantly, if you're going to be going ahead and do these option strategies or trading Opendoor, remember, this is not a set it and forget it. You need to keep monitoring this stock constantly, because this stock could go in any direction, up or down, very, very quick. Now, investors and future investors, if you guys have any questions about the strategies that we just went over here, or any questions on Opendoor, then let me know in the comments below. Also, remember to go ahead and subscribe to get the live videos every single Wednesday. Now, the whole point of me making this free content is that I'm trying to help as many people as I possibly can with small accounts to keep growing their accounts with income from options trading. So if you do know anyone out there that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.